Welcome everyone to this week's Swyftx Squawk with me, Pav, lead market analyst here at Swyftx, and Bitcoin's back. It's back at the yearly open of 2025 after a pretty incredible week we had last week. The real question now is this rally that we're seeing, is it going to materially stay here? Last week, as we spoke about some clarity on the tariff front and the trade war, but really we've come into this week with no real additional clarity. We've seen just continued talk of potential deals, not really signing and sealing away and delivering what the market may be expecting. And I think that's what's key right now. In a minute, we'll talk about some of the growth figures, but number one, some clarity on the progression of these trade deals, but then also some of the ramifications of obviously the tariffs. Since they've been implemented, Trump's just passed his first 100 days in office. We've seen figures out of the US that I imagine not many people are very happy with, showing a negative growth for the quarter. Now, this is pretty important when we're talking about things like recession fears, what could be happening that's causing the economy to shrink in early 2025. And obviously the fingers pointed square at the tariff regime that we are seeing. But if you want to learn more about GDP and recessions and all that jazz, check out this awesome article by the team done at Swyftx Learn. You'll be a pro in no time. Now, the real call out is that while we have seen this figure shrink quite considerably from the forecast of 0.2% for the quarter, resulting in a negative growth figure, is this something to be steeply concerned of? That's what we're going to look to answer today with some data, some commentary from market analysts like Kathy Jones, who are looking at the underlying metrics that build up the GDP figure. And what they're seeing in their numbers is that the amount of imports that the US has seen has definitely outweighed some of the other key metrics in this modeling, showing that the demand for gold bullion physically delivered to their shores is impacting that trade deficit, so the import-export on that side of the balance sheet. While the trends for other metrics in the framework haven't really shifted to largely unappealing figures, that net import-export figure has definitely drawn down quite a bit on the net GDP result there. And so that really starts to beg the question, is this growth fear or recession risk that's being plagued right now, does it hold any water? Is it really that big of a risk? And we can turn to other publications as well for modeling and data, such as the Federal Reserve Bank of Atlanta. They have a GDPNow modeling tool where they basically track mathematically what the more real-time effect of what's happening in the economy is having on forecasting what the real GDP is going to be. But the key takeaway here is that with the economic modeling that the Atlanta Fed GDPNow estimates, they're still expecting growth according to their modeling by the end of Q2 2025. So when we take this all in, that nothing's really potentially changed. We've seen obviously a lot of importing of physical gold rather than exporting of goods. We still have that sort of scare lingering, or fear or headline risk of tariffs not resolving. There's obviously still quite a bit that we all want to see precipitate over the next couple of weeks, next couple of months, just to drive a little bit more certainty and give the market a little bit more confidence that this rally that we are seeing, that it's here to stay. And that's obviously what we're very interested in understanding. But for now, that's all from me here today at Swyftx. We'll be back again next week to keep you updated. Thank you.